All right, guys. Today I'm going to kind of teach you about my strategy and how I trade and what has worked for me to be able to, pass accounts and, win trades and things like that over a long gated period of time. I'm also going to be eating some strawberries with sugar. We're going to discuss. But, you know, I think the main key, there's a couple main key things in your strategy, right? It has to be your strategy. You can learn different things. It's good to learn a bunch of things, but then you have to simplify it because you can't keep looking for a million things in the market, or else you'll confuse yourself and be like, well, there's a bearish this, bullish this, bearish this, and you're like contradicting yourself, and then you don't know what to go with. But so it's really important to just trade what makes the most sense to you. What is the easiest you can find out when you're looking at price action? Do you just see inverses right away? Do you see order blocks? Do you see breaker blocks? Do you see the unicorn model? Do you see, CSIDs, market structure shifts? Like, what do you see? Okay, let's get into it. So, there's strawberry right here. For my model, it's the ICT market maker model. What is that? That's the curve thing that either looks like this kind of. Like you'd have like buy side of the curve, sell side of the curve, or it can be like this. Like that. That'd be a market maker sell model, market maker buy model. Today I'm not going to really like go into it too much because I don't think that's necessary. I'm kind of just like taking you guys through the basics of what my strategy is and what works. I wrote them all down. Okay. So model, market maker model. We'll look it up actually because I don't know. It's this thing right here. Right? Let's see if there's a better picture. Basically this right here. So when I'm explaining these things, it'll be easier to understand. So I'm always trading the market maker model. The market moves in a market maker model, and I'm sure I can find one literally on this. So look, this is kind of a prime example of one right here, right? Obviously, there's key components of a market maker model that you kind of must have in order to have the market maker model. But before we took this was a sell side, right? You have buy side of the curve, you have a consolidation right here, right? You have your original consolidation, you have buy side of the curve, and then you sell off. You can see these on all time frames, right? There's daily ones, monthly ones, weekly ones. Like right now, we've been in this. See, we like. I'm not gonna go into what a market maker model is, but you have to do something. And you see that we take. You take this here, and then you start to buy up, which is then acts as buy side of the curve. So we're almost close to completing the buy side of the curve. So realistically, we still are super bullish on the Nasdaq things because you see all these things, right? But they overlap into each other. I'm getting too deep into it. So now, what is my entry model, right? This is taking a while to find. I should probably pull up my journal too. So this will be a little bit of a yap video, but I think there's a lot of key points in here. My entry model is I want to enter at that. Penny, what are you doing? I want to enter at that smart money reversal range. And I want to target the original consolidation or the draw on liquidity. So I want the higher time frame model to align. So let's look at an example. Prime example right here, right? This model didn't complete itself, but as you see, we have sell side of the curve, buy side of the curve. Smart money reversal right here, right? That's why my stop loss is so low. Because in order for this trade to get invalidated, it would have to become below this low to stop me out. And until then, it is not invalid. That's an example. Let's see if this one. This is another example. This is a more higher entry though. As you see, you have areas of invalidation. I didn't want to see price come below here. So it's all about putting price. It's the keyest thing because there were so many times when I would get stopped out and necessarily that my trade wouldn't be invalid, right? I would get stopped out and then we would run to TP. I have an example. This one. Right here, look. So I don't have the picture of it. But as you see, I ended up getting stopped out and we ended up running all the way up to the high. I don't have that on here, but it did happen. So that's kind of the point. So the model is the market maker model, right? You got to identify that first. There's a couple things you need to have some sort of liquidity taken and a touch of a high time frame PD array And if you have like an hourly market maker, hourly fair value gap, it's going to be like a 15-minute PD array or 15-minute market maker model. Let's try to find it. This right here, right? So this is how it works. 15 minutes going to be a 1 minute model. 1 hour is going to be 5 minute, 4 hours. So like you can kind of tell like, okay, what PD array do I have? This is the time frame I should be looking for. Okay, so that's the model, right? The entry, I prefer to enter off of either an inverse and a tap back into it. Like say like you have, I think this is a good example, right? So if we look here on the 5 minute, right, you get this inverse of these two key bearish imbalances, right? Then you tap back into it, which is also a bullish imbalance. So this is a high probability zone to reject to go higher. This is one of my favorite entries right here. I think I probably also have entries off CSIDs. Let's see. Kind of the same thing here, just the SMT. I want the protected high to get put into place. I want the invalidation point to get put into place. We come down, inverse of balance here, and then continue lower. Very, very like that. So that's my entry. It's really just off of like CSIDs into the direction I'm trading. Bullish fair value ups, bearish fair value ups, inverses. Nothing more than that. I don't trade order blocks. I don't trade breaker blocks. I don't really trade anything like that. And one thing I had to do is I had to go back and test my data. I used to be a big like market entry person where I would just hit like market buy, market sell. And a lot of those times like it would be off an inverse, right? Because those are the times you're going to take those type of trades. So we'd get the inverse and I'd hit market sell. It would mess my fill up a decent amount. Let me remember the timestamp, 7 minutes. It would mess my fill up a decent amount, right? And that's not what I was looking for. So then price should always come back to that area and then go down. So then that helps you get a better fill and stuff like that. So something I had to do is run the data from all of these trades in every single month and see where I was most probable for that. Okay, stop loss. Where do you want your stop loss to be placed? Kind of already talked about this, but the best stop losses are going to be in a point where invalidation occurs, right? My favorite is this the beginning of the buy side of the curve. As you can see here, the best stop loss would have been placed down here, which I did enter on like my eval, but I got in later on my express. And the way to look at this is like, we already respected this 1 minute twice. I don't want to see it get tapped again, right? If we're going to be bullish, I don't want to see that tap again. I think yesterday is a good example too, right? This is a good spot to have your low at this SMT. So an SMT low is a divergence in between the two pairs of the NASDAQ and the ES. I don't want my, like you could have your stop here, and the logic is I don't want my price to go lower than the SMT. If we're going to keep being bullish, we should not disrespect this bullish SMT. That's logical. It makes sense. It's just the simple dynamics of price. What else? Same thing. It all applies to the liquidity sweep. Kind of just have your stop in the area of rejection to go the opposite way. Why am I getting FaceTime? To go the opposite way. Now, time frame wise, what time frame do I like to trade on? Now, this is something that had to be very, very key to me, is because I used to always just want to trade right when so there was a time and point when I would get on the charts at 8:30 a.m., right? Let's look at the charts.
That's a misread.
This is what?
500 through 9. Gotta pick it up on this back 9. Shoot 7 on roll back. Yeah, there we go. That'd be sick. Let's go, baby. What do you got?
I need to find the time that works for me. I need. And then so then I had to find the correct time to trade. So I used to get on the charts at like 8:30 a.m. and it was just way too early, right? So sorry, I got interrupted. The New York Stock Exchange opens at 9:30 a.m. Let's get on the 15-minute. Today there was news, so you don't really count it. I used to get on here and sit on the charts for an hour until the market would open, and then once it would open, I would then sit for an hour, right? I would sit for an hour. Then I like to trade at 950. So I would sit for an hour, and then I'd sit another 20, 30 minutes, and then I would try to trade. And I used to just, like, I would take all my losses pre-market before the market even opened, or right after market opened. So what did I start to do? I had to run the data of when I was most profitable. I did from 8:30 to 9:30, 9:30 to 9:50, and 9:50 and on. And the data showed of all the trades that I have taken over a long period of time that I was the most profitable from 9:50 and after, which is the New York morning macro or whatever you want to call it. So then I had to limit myself to that. So now, as you see, I'll do this right now actually. So look, let's check. This is how I base it, right? Forex Factory. 10 a.m. news tomorrow, right? Okay, we're going to do this right here. 10 a.m. lockout. I'm not allowed to trade until after 10 a.m. These are rules that you have to have in place in order for you to see success, right? I know what's going to mess me up. I know there's been so many times where I've gotten a trade at 9:50 and then news comes out, wicks me out, and then I lose the trade and I'm done for the day. And if I would just waited for news, I know better to wait for news and things like that. I do want to change my risk on my Express. I want to risk more. Okay, I already have it. But that's prime example right there. Or I would get caught like trading Asian session, and you don't need to do that. You need to find your session. For me, what works the most is 9:50 and on. I know people, I have friends that trade 8:30 and they make bank and they're so good at trading. I know friends that trade right at market open. I have people that trade at London. It's what works for you. You have to just test everything out and see what makes the most sense to you overall. What's next? Time. Exactly what I just said. So if there's no news at 10 a.m., I would trade at 9:50 to like 10:30ish. Like today, for example, I didn't really follow my rule. I took this trade at a little past 10:30. It was a stupid trade. I was okay with the loss. Built up liquidity. It was stupid. I shouldn't have taken it, and I broke a rule. But I had other rules set in place that prevented me from this being like a catastrophic account blowing, rule break like that. So that's the thing right there, right? So now let's talk about your frequency. This is something that's super key that I never really understood until way recently, and it helped me really, I think, have my trading breakthrough psychologically. I am more comfortable with taking one trade a day. I want to be in the market, out of the market, and that is it. I don't want to dilly frick around. I don't want to take 7 trades. Some people like to take 1, 2, 3 trades. It depends your model. I'm trading a more mid-time frame, like 5-minute, 10 a.m. model. So I don't really think I should, and the way I have my stop placed, if my trade gets invalidated, there's not going to be another entry. There's some people that like to trade like super tight stops, and they might get like wicked out, and then the trade starts to go in their favor, so then they need to re-enter. But like I used to trade that. I don't like it. It's not my thing. It didn't work for me, and that's just the key in this aspect is finding what works for you. What's worked the most for me is one trade a day. I take my win, I get off the charts. I take my loss, I get off the charts. I take my break even, I get off the charts. For example, right, I have all these examples. Yesterday, right, this day right here, I was at the gym and I was up like $700 and got stopped at break even. Unfortunate, I could have ended up getting back on the charts, taking a trade, FOMOing into something. Or right here, right, I was up like $500 and then I get stopped at break even. I could have been like so enraged and like I know the trade's gonna go my way. I know. But no, I'm locked out, and that's it. Look, one trade. These are all one trades. When it says like 2 trades, it's because I added positions to the original trade. So it's still one trade. So I've taken 8 trades this month, and I'm down 500. These trades, terrible. Don't want to talk about them. Those are terrible trades that shouldn't have been taken. They didn't follow this system. Risk. Now, this is something I used to struggle with a lot. And someone, I don't know if you guys know who Cole Trading is, but he has been very beneficial in my psychological breakthrough recently. I'm talking so fast. Okay. So I used to only trade like $200 a day on a 50K Top Step account, right? Or even let's use 300 for the example. You would need to make 10 reward in a month to pass that account. 10 R in a month is pretty unrealistic. That's like 2.5 R a week, which isn't too unrealistic, but it's a lot of R. It is a lot of R, and all you're doing is paying $50 cash for that. It's not worth the way you take it. So then I stepped back. I said, okay, so I need to be a little more risk heavy. Or not risk heavy. I was like, I need to trade more. Started trading more, started losing more. And I was like, okay, how do I fix this? So I was like, okay, I'm going to start this challenge. I'm going to do one trade a day but I'm gonna risk. So on my evals, I risk like 750 bucks, 500, 750, and I target like I want to get in for one mini is my goal, but somewhere in that region, and I really just target like 1,000 to 1,500. I want to pass those accounts in 2 weeks maybe. Let's see how long I've been on this account. Week since Friday. So this is gonna be a little too long. It's unfortunate. I should have passed this week, but it happens. I'll have it passed by the end of the month for sure. Next week's my goal. But going back to this, it's just one trade heavy risk, and what that eliminates is when you trade such low size, you start to realize this in your trading. You're like, okay, I'll give this a try. For example, I had that problem today. Let's go back to my trades. I had that exact problem today that I was trading such low size. I was like, okay, I'll just give this a stab. If it works, cool. There's a good risk to reward. If it doesn't work, it's all right. It's not a lot of money. Look, I only risked 150, right? This is stupid. This risking so little made me not care about losing it, right? And I was like, because there is a probability maybe it plays out. This is like 10% probably, a terrible trade. But I was like, there is probability, but I'm only risking, 150 bucks for 700 bucks. I was like, I'm good to do that. Because like if price was going to go that way, it was going to go that way. And so then you have to get away from that area because it is a very like terrible place to be, is because you'll just keep giving these trades a try. This isn't an A+ setup. This is terrible. This right here, A+ setup. This right here, A+ setup. These are the trades that should be getting heavy size and you should be trading into. This trade right here, mid, not good. But it just goes back to say like, it's just so important to risk heavy because one, it's 50 bucks a month. So if you don't have enough capital to like fork over 50 bucks a month for a eval, probably should get a job. If you can't, you shouldn't be on an eval account for more than a month. You should really only be on an eval account for like 2 weeks, maybe 3 weeks. Kind of stretches 3 weeks because you should be risking heavier. You should be trading to pass. It's not your money. It's only $50 capital. It's literally going out to eat is that account, and you're treating it like it's freaking the holy grail of the trading accounts. So you need to risk heavier. That's like on my thing. I was down like 1,000 last week, so I started to risk lighter. And now I'm back up. I'm feeling confident. I shouldn't have taken a trade today, so I should still only be down 300. But I'm gonna start risking, around 400 again, just because I'm confident, and I don't want to deal with this low risk stuff and taking these dumb things traded, because it's not needed. It's not needed to take these stupid trades. Okay. Going to risk to reward now. Now, when you're risking heavy size, you don't need high RR. If you're risking $200, yeah, you're going to want to target a 1 to 4 RR because you want to make 800 bucks. But if you're only risking 400, you only need 1 to 2 RR. So the higher risk, obviously the higher reward, but you can have lower RR. If you're risking 1,000 bucks, you only need a 1 to 1 to make 1,000 bucks. And that 1 to 1 is probably going to be an A++++ setup because you don't need many points. You don't need much stuff to make that 1,000. That's kind of the logic there. It's how you should trade. Low RR, in my opinion, is really beneficial. I think it's easier. I think some people are good at high RR, but they're going to take more losses. If you're lower RR, you'll take more wins and you'll have a higher win percentage. If you're low RR, or if you're high RR, you'll take way more trades. Your win rate will be a lot lower, but your one winner every 6 trades will cover your 6 losses and some. And that's just the way it's like a teeter-totter. That's the way the teeter-totter flips back and forth. I prefer the low RR because I don't necessarily like taking a lot of losses, and you have to figure out what works for you. Like for me, I'm fine if I follow my rules and I take 10 losses in a row. I'm cool with that. If I followed my system to a T, I trade how I know how to trade. I'm cool with that, taking those 5 losses in a row. It is what it is, and that's something that's super important. So let's go back and let's break everything down. So we're gonna go to today. Right, so we're going to break down my whole system. So, so first thing I do, I want to figure out my bias. So, going into today, I had the wrong bias. But it's okay. So, we had no 950 news, So, I marked out these PD arrays. Okay, we have this here. What I should have looked at, let's do it the correct way. I should have looked, okay, we have these SMTs here. We have, let's mark out 950. Right. Okay. So I'm allowed to trade from here to here. We have 10 a.m. close. We're obviously buying up. We respect this 15-minute bullish fair value gap. Bull. Right. So 950 to 1030-ish. Right. It's an hour window. Now, what trade could have been taken this hour window? One, obviously the order flow is bullish. You should have been bullish. Obviously, it's clear. I missed it. It happens, right? We pull back to this. The only trade I really saw, you pull back to this micro, right? You pull back to this. You zoom in maybe a little more. You look at it and you say, okay, what do I need to enter here, right? So you're pulling back to this imbalance, right? And what do I like my entries to be off of, right? So you have this liquidity taken right here. So there's 2 entries, right? You have this bearish imbalance, right? So hypothetically, you never want to see a double inverse, right? If you get stopped out for a double inverse, get out of the market ASAP. So look at this. We have this. You could enter right off this inverse, you know, stops at the low, right? Why is this a protected low right here? If you look at this, this is an internal market maker buy model. What was the rule? 15-minute equals a 1-minute market maker. We have a 15-minute fair value up, a 1-minute come down original consolidation right here, right? This is our TP. Now you could get a little freaky and zoom into the 30-second. Doesn't really matter at all. It's the same thing. It's just a fractal time thing. And when you see when price aligns, we move. We have original consolidation, sell off, consolidate, take the low, buy up, inverse, enter off of the inverse. You go straight to TP. So your stops at a protected low. You at your one trade in between your time zone. Win or loss, you are out of the market. There's nothing else to trade in this market. You should be out of it. And me, I was an idiot. I took a loss up here. So just simplifying it, and this is something I do need to talk about. Something that's helped my psychology the most. That's how you spell it. Where's the Y? Psychology. So about a month ago, no social media. Why is this? Now, the most important thing is the no social media, and that is because you need that dopamine reset. My social media, I would have traders here and there. It's because you don't want to see what others are doing. You lose and others win. You think you suck, right? Or you see someone that's like, oh my God, I'm so profitable, I made this much, and he enters on the 15-second time frame. That doesn't make sense to you. But you try it, and it doesn't make sense to you, and you just keep flipping strategies and losing your strategy and stuff like that. You need to do what works for you. I did this a month ago, starting on, what's not going to show. It was, let's see, I'm writing on my calendar. Start of no social media. It's because you need that dopamine detox. You need to be able to sit at those charts and stare at it and not take a trade and be okay with that. You don't need to feel like you're falling behind because you're not taking a trade. That's a problem. Is you start to, think, oh my God, TJR made money today. I should have made money. Justin Werler made money today. I should have made money today. Like, or even IGT himself. You're like, I should have made money today. No, you're at your own pace. You're doing your own thing. It is not a rush. You need to see what works for you. Do you know how long it took me to figure out all this stuff that works for me? I started trading back in the ICT back in October of last year. October of last year is what? June, July, August, September, October. So it's 4 more months. It's 6, so that's 10. So it's been a year and about 6 months, I think, or something like that. Yeah. Something, I don't know. It's been a long ass fucking time. And I've started trading, documenting in January. It took me that long to figure out this formula. It shouldn't take you this long. It's because I got unconfident in some areas. I stopped doing what I knew was working. I would jump strategies. I had terrible psychology. I thought because this guy over here was winning so much and I wasn't, that I was doing something wrong. I thought I needed to trade pre-market because I saw someone that was good at trading pre-market. I thought I needed to snipe market open. I thought I could trade every single draw on liquidity. I thought. You don't need to do that. You just need to find what works for you. I used to be a flip biaser. I'd be like, okay, well, I had the points of FOMO and over leveraging and chasing. I would get stopped out and be like, okay, well, the price just has to go down. I went long, got stopped out. Price just has to go down. That's not true. Stick to your bias. I get my bias. If we don't move in that direction, I shouldn't take a trade. Today's a prime example. We didn't move in the bearish direction, and I still took a trade. Was it low size? Yes. So I got lucky. I lost out as low size in that. But I still shouldn't have taken a trade. And just showing you I'm human and still make mistakes. But I'm also showing you how my journey has went over this whole YouTube career. I have it all documented. You see when I was terrible, blowing accounts. I've blown so many accounts. So many. I passed one account so far. And that's just when I implemented this strategy and started following these rules and things like that. And I'm about to pass a second account and I'm going to get a payout this month. Like, it's stuff like that. And I just hope you guys all make sense of this. And your strategy is your strategy. You should have what model makes sense to you. Is it AMD, stuff like that? Is it what entry model makes sense? Like, I love having the smart money reversal. I love a IFEG, CSID, or a tab of a something like that. Like, where should your stop loss be? I'm never gonna get stopped out again because I'm fearful of the greed. No, I can't let that happen. Time. This thing has helped me a lot too. I get on the charts now like 9:30, 9:35. The market has already opened by the time I'm starting to get my buys. Right? And tomorrow I won't be able to charge till 10 a.m. One trade a day is what makes sense to me. I'm fine with that. I don't want to have to sit there and be like, oh, I should take this trade, I should take that trade, I should take this trade, I should take that trade, I should take this trade, I should take that trade. No. That's what it is. Risk to reward. I still am a little new to this area, but I need to start focusing on the lower risk to rewards, and 1 to 2 is a lot. You got to realize what is nice and what isn't. What do you like and what do you don't? Psychology is just a thing. You have to stay patient. Patience is the biggest thing. You got to stay disciplined. You got to be disciplined in your life, in your outside life, in your trading life. The way you do is the way you do everything. Well, if you guys enjoy this video, I'd appreciate if you like and subscribe. Join my Discord link in the description. If you have any comments, I would be glad to help. DM me, follow me and DM me, anything. If you want to schedule a call, we can talk and help you. I would love to do that. I want to help people. But yeah, that's all I have for you guys. Stay true and God bless.